So Ellie, how did you find out? You found out through Secret Jerusalem about this
I
class?
did, yeah. I saw the post and I figured I'd join in. Yeah.
I decided to. We came to Israel about a year and a half ago from the Maryland area, DC area, and
Maryland area, where?
Rockville.
Okay, I grew up in Baltimore.
Oh, so people, when I say Maryland, everyone assumes Baltimore, because that's the big Jewish
I
community.
always say Washington.
I know. I always say Washington because it's an I don't that's why I don't usually say Maryland. It's an hour away, and I don't really know that many people there.
Yeah, yeah, that makes sense.
We go there for
Rockville's
the
a nice
restaurants. That's what we do. We went to Baltimore for the restaurants.
That makes sense. That's yeah, most of the restaurants are in Baltimore, and the rest of them there's some good ones in DC, but most of the kosher restaurants are all in
So
Baltimore.
let me just give you a little background, just on our first class. I had not planned to do Zoom, but I had a number of requests, people saying, you know what, we want to start. So I'm like, okay, we'll do Zoom. This is my first time ever initiating a Zoom class. It was pretty easy, actually. So we got this about a year and a half ago, and I was teaching at Aish Torah, the Essentials program. And then when lockdown started and during the break last summer in yeshiva, I decided to teach a class on finance. I called it Future Donors. I said, you guys can all be wealthy. There's no reason that everyone in the world can be wealthy. You just have, obviously not everyone's gonna do it, but you have to learn certain tricks that I have discovered, I figured out on my own, that I wish someone told me in my 20s. I wish people had told me this, what I'm gonna be teaching you over, how many classes we have, that the power of compounding. Everyone knows about the power of compounding, but do you really know the power of compounding? And what happened back so I was teaching in August, this class, and the students loved it, and I have a big following, and I teach at Torah. I decided, you know what? I'm not doing anything. I might as well teach it to whoever wants to come join. So we're going to try to make this, I don't know, weekly, monthly, whatever we can handle. If you enjoy it, we'll keep going. Just ask me, I'll teach. That's the way I look at it. So what happened back in March is we had something, obviously Corona hit, and in order to save the economy, the government printed lots of money. Now they've printed lots of money in the past, but now they're printing lots and lots of money. And I've always looked back at the value of things. And I was thinking to myself, back in the 1970s, I was driving through Old Town Alexandria, and my sister said to my father, oh, I'd love to buy one of these townhouses, these old historic townhouses from the 1700s. My father said, oh, they're very expensive. They cost at least $20,000 to $30,000. This is the mid-late 1970s. Those houses now cost at least $2 or $3 million. And then I started thinking back to, I've never been a big stock trader. I've dabbled in stocks here and there. I'm a coin dealer by trade. I buy and sell rare United States coins. My skill was in seeing the potential in something, seeing how much value that something had that could be, like thinking beyond what most people think. And that has led me to start studying stocks and wealth creation. And when this happened back in March, I could see the writing on the wall that when, 4 companies hit valuations of $1 trillion, excuse me one second. My dog was barking. When 4 companies hit valuations of $1 trillion, I was blown away. If you had asked me 5 or 6 years ago, will there ever be a $1 trillion company? I would have said, no way. Gene, what do you think? Gene Berman, you're on here. Would you have thought 5, 6 years ago there would be a $1 trillion company?
I never gave that issue a thought. I mean, certainly the large conglomerates were growing very rapidly. Picking that number as an example, no, I didn't think about it.
No, I always thought about it. So we get something, there's an idea we're going to discuss many times called price anchoring. Price anchoring is we get a price in our mind that something should be, and when it goes up to more in value, it's like, oh, it's too expensive. So let's say you grew up in a house in a neighborhood in Baltimore, and let's say Pikesville, and that average house is like $200,000. And suddenly a house sells for $210,000, $220,000, $230,000, like, oh my gosh, this neighborhood's getting expensive. So in your mind, it's going up in price, it's overpriced. That's your mind. But you don't understand that the market is determining the value of that house. So when I thought of Amazon being worth, 7, 8 years ago, it was worth a few $100 billion, I thought it was crazy. I said, this is crazy. How can people pay hundreds of billions? How can something be worth that much money that is losing money every year? How can it be worth that much money? So what people pay for in the marketplace is potential. And that's the idea that we want to learn in this class, is that we want to find, the ultimate goal in this class is for us to find companies that have potential that we have never thought about, to find companies that are, valued at, anything for hundreds of millions of dollars to a few billion dollars to maybe even tens of billions of dollars that we think have the potential, the runway in front of them. When I mean runway, I mean like massive growth potential, and invest in them. I am not a trader. I am not a stock trader. I don't want you to be a stock trader. That is gambling. Is to invest in companies for the long term. I'll give you an example. Back in 2014, I was in a board meeting for Aish Torah in Rockville, Maryland. And one of our board members had a brand new Tesla, 2014. I walked out of that board meeting, went to go look at his car, and I loved it. I immediately went out and bought 100 shares of Tesla for $30 a piece. $30, and I'm not a big stock guy. Obviously during the boom times in the late 1990s and 2007, 8, I was doing some trading and stuff, but not a lot. I wasn't an investor. And the reason I want to get this across is that I'm an arbitrager. My business of buying and selling coins was to buy something and sell it as fast as possible, make a profit. I am not an investor. That's not what I was. And I made a mistake. I should have been investing in Amazon in the early 2000s. I should have been investing in Netflix. I should have been, I'd be sitting on gajillions of gobs of money because I didn't have the vision to see the potential in something. And that's what I'm trying to train myself. One of the reasons I'm giving this class, I'm just trying to get my own clarity wrapped around my own head and finding companies I think have massive growth potential. And that's what this class is about. Finding those companies and thinking out of the box. We're going to discuss some of those companies. So the first thing we discussed is the fact that the value of money is changing. Governments are printing trillions of dollars, and something that we thought in 1970s was worth 20,000, and today's worth $2 or $3 million. I think we're gonna have massive growth in money and inflation. I think you're gonna see that $2 and $3 million house being worth $4 and $5 million within 10 years. I think you're gonna see, and you're seeing it now in real estate. Real estate is flying high. I think most of America, I don't know, maybe not New York City, maybe not LA, but I know in Rockville, Maryland, where I'm from, it's hot. I mean, they can't see. One of my brokers lives in Virginia. He had 10 listings 2 weeks ago. He's got one now. He's got one listing. He's got like a number of guys who are agents. They can't find properties because I think people were smart. And I kind of got this clued in back in March. If you have cash, you're going to end up losing money. They always say I've always been the believer in always having a good amount of cash around for me because I had the ability to buy deals when they became available. But I think right now that is not a good thing to do. When people talk about hedge for inflation, I think everything's a hedge for inflation. Gold, Bitcoin, everything is a hedge for inflation. But I think the biggest thing you can do, the biggest chance to have to grow your wealth is to buy software stocks. The writing's on the wall for me.
Say it again, Daniel. Buy what?
Software stocks. We have seen an acceleration of what's been happening over the last number of years. I'm not good at remembering the numbers, but I know that we've seen like 5 or 6 years of growth in online traffic, online sales, online software business happen in 3 or 4 months. Massively accelerate. And when when you go to your bank and you want to sign up for a checking account or get a loan, they have you sign all this paperwork. And a bank that switches from manual paperwork to DocuSign, they're not going back. They're not going to say, oh, DocuSign, we have to pay this monthly fee, but wow, all our documents are now organized online. We can search them easily. They get organized. They get searched by another company called Elastic, and we can find anything we need. And like, why are we going through all this paperwork? Why are we hiring 20 people to do this paperwork when we can pay one software company a few $1,000s a month to manage it? And I think you're going to see massive growth in these companies. And people say right now that the stock market is overpriced, which there are stocks that are way overpriced. And we're going to try to understand the valuations of things. So for example, we're on Zoom right now. And I bought Zoom back in June and did very well with it. But I did sell it when I think it went up to almost $600 a share. I sold it for about $400 a share. Now it's under that, but it's been having a hard time getting back to that number because the valuation is $110 billion. And when I look at Zoom, I'm like, okay, there's a number of things we're going to talk about. One is, what's the moat? When I say the moat, I mean, like, think of a castle. And around that castle is a moat with alligators with lasers on their, on their heads, and you can't get into that castle because it's too hard. It's impossible. I want to buy companies. One of the things I want to own are companies that have big moats. It's the moat. The idea of the moat is that it's very difficult for someone else to start that company and get into the business. Does that make sense? Right? The moat. So for example, one of the companies I had purchased was Chewy. Chewy is a dog food company. It's not a very big moat. Anyone can sell dog food. Anybody. But they have a tremendous program. They've been massively growing massively. And I bought Chewy back in May and June. So what I realized back in May and June was, like, I heard from friends of mine, you couldn't get a dog. Like, there was you couldn't go to any pound in the DC area. I went to the websites where I found my dog, Mocha. They were all sold out. So I'm like, I gotta buy Chewy because it's, even though it's expensively priced, it's gonna keep going up. And I bought it. I think it's over doubled since I bought it. And I wouldn't buy any more with a $45 billion valuation, but it could keep growing. It could keep growing. So
What moat did you see for that, Daniel?
Huh?
Daniel, what moat did you identify for Chewy?
What'd you say? What?
Moats. You were talking about you like companies where you could identify a moat that makes it difficult for someone else to get into that business. What was the moat for Chewy?
Chewy doesn't have one. Chewy didn't have a moat. That's the idea, is that I want to buy things with moats, but it's not always the case. When I see massive growth opportunities, it's got what's called first mover advantage, I'll jump on that, right? So for example, some of the moat companies that I think have great moats is Trade Desk, and Roku, CrowdStrike. I mean, I'm going to end up giving a list to everybody, so my list always change, but these are companies that are going to bring us into the 2020s. You look back in 2025, you'll see. By the way, when I was teaching at Aish, all the students used to call me rabbi, and I'm not a rabbi, so they started calling me coach. So I'm known by all the yeshiva bachers at Aish Torah as coach. They're going to call me coach. That's fine. And that you're going to look back and say, remember, coach said back in 2021 we should buy CrowdStrike, and it was, at a record high price of $220 a share, and now it's at $2,000 a share. You're going to look back and it's like, thank God I bought these stocks and didn't trade them. Thank God I bought these stocks and kept them. And that's what we want to find, those stocks that have, when I buy a stock now, I want to see that has the potential to go up, not 10 times in value, not 20 times in value, but 50 to 100 times in value. The reason why I sold my Tesla stock about 3-4 months ago was because it was worth $500 billion. I was like, yes, Tesla could be worth $1 trillion.
Put it up.
Someone's on. So news just came on. And
You were talking about Tesla.
yeah, but I want to buy stocks that can go to have a chance to go up 10 times to 100 times in value. And I didn't believe Tesla had that chance. So I sold it and took that money, which was all profit basically, and I put it into like CrowdStrike and Roku and Pinterest and different stocks. So what our main goal is, I want to make sure I get a few points across to everybody.
Choose it.
Hold on a second.
Nice.
Mute people.
We're on mute.
Let's see.
Anytime you have to mute yourself.
Eitan, you got to mute. There you go. He muted. Can everyone hear me?
Yeah.
Okay. Thank you. The first idea about creating massive wealth is to start saving every single month. I mean, if you can put away, I'm saying even $10 a month, $100, whatever it is you can put away every single month. I don't want you to put it into a bank. I want you to get a brokerage account. Okay, maybe you already have one. I have one with Schwab and I have one with Citibank. But you can get Robinhood's a big one. Schwab, Ameritrade, Fidelity, any of them. Get a brokerage account, put money in the brokerage account, and start training yourself to start buying stocks. I'm going to help you, give you a range of stocks to buy, but the goal is to own at least 20 different companies with big runways of massive growth potential. And all you need is one or two of them to do what we hope to do, and it doesn't matter what happens to the rest. Because like I tell my class, when you there's an idea that I want to make sure you understand. I mean, this is, if you trade stocks, you know this, but I don't know a few of you. So like, if you go short, when you're shorting a stock, that means you are betting that it's going to go down. There's different ways to short a stock: by buying puts, by borrowing the stock and selling it. There's different ways, but when you short a stock, you're betting it's going to go down. When you go long on a stock, that means you're betting that it's going to go up in value. You can do that also a number of ways: by buying shares, by buying options. There's different ways of doing options, which we'll get into next year. When you go short on a stock, when you buy a stock, let's say for example, a stock's $100 a share, and you want to short it, the most you can make on that stock is $100 a share. That's the most you can make. That's if it goes to zero. Most stocks don't go to zero generally. They always trade for years and lag, and you know, so that's the most money you can make. But when you go long on a stock, what's the most money you can make on a stock? Anyone? It's unlimited. Do you understand? It can go from 100 to 200 to 400 to 600. It can go unlimited. It's just there's no end in sight. You know, I bought Tesla for $30 a share. I think I sold it for $24.75 a share. Do you understand the power of a growing company? In fact, Albert Einstein said it. He said the eighth wonder of the world is compound interest. Because you have a company that's growing exponentially, 20, 30, 40% a year. On top of that, and it's a software company, which by the way, the reason why I like software companies because the world is basically the customer. Everyone in the world is the customer. When you buy, you know, if you buy a company that sells sunglasses, well, your market is just people who buy sunglasses. I mean, it's a limited market. It's not limited, but it's not as big as a software company. Software companies sell to every single company, the Fortune 500. One of the companies I've invested in it's called Now. It's a software company. They came out today and said they have 1,100 customers that spend over $1 million a piece. 1,100 customers spend over, like, it's crazy. And every year they spend more and more and more. One of their companies I like, it's called Unity Software. Their customers every year have been spending 20 to 25% more every year. That's a stickiness. You know that, you know, Malcolm Gladwell, if you ever read his books, he uses the idea of stickiness. You want to have a company that's got a stickiness factor to it, that people are not going to just, you know, leave. You want to, it's something called a renewal rate. It's like most companies that are really good will have a renewal rate of over 90%. Their customers are staying with them. When you have, and this is the whole concept of Peloton, which we're not going to get into today. If you guys know what Peloton is, Peloton is a bike company, and they sell bikes around the world. And it's an expensive bike, I think. And when you get the bike, you sign up for a monthly fee of, like, I don't know what it is, $30, $40. I have no idea. But you get classes from around the world. Like, you can go on any time of day, and there's classes in LA and New York and London, the best teachers. They get the best teachers, and you're live in a class with them doing the bike. And it's become very popular, and the company's something worth like $40 billion. Like something crazy. Like, I think you could take every exercise company in the world. I haven't done this research, but I bet you could take every exercise company in the world, every gym in the world, add up all their valuations, and it would be a pittance compared to what Peloton's worth right now. So what are people betting on? There's 2 million people signed up with Peloton, paying this monthly fee. You pay $30 a month, you get 2 million people. That's what is that? $60 million a month in recurring revenue. They want to build it up to 100 million people. That's their goal. That's what the owner says. And he could be right. This could be a multi-$100 billion company. But he's selling bikes. He'll sell treadmills and other exercise equipment. So people think that it's going to become the next ecosystem like Apple. You know how Apple has an ecosystem? You know, with the phones and the apps and the computer, it's a whole ecosystem. And they could be right. But I look at it as how many times you've been in someone's house and you go in their basement and you see a treadmill that hasn't been used in 10 years, or you see a bike they want to give away. Everyone has those machines. So what's going to happen to Peloton? Is it going to go back worth to $1 billion from $40 billion, or is it going to be worth $200 billion, right? It's a risky investment. You know, it's been, I read about it a lot and people like it, but I'm not so sure. You know, I want to see, you know, I could be wrong. It could be a great investment, but I'm not going to play. You know, plus it's not a moat. Anyone can do this business, although they have first mover advantage. Okay, so we talked about saving money every single month. to put into the stock market. Secondly, we talked about making sure you have a brokerage account. And I'm telling you this because it's just like, when I started rapping to film for the first time in my life, it's something you have to practice. It doesn't come like, oh, I have to rap to film today. It's like, it has to become part of you. It's become part of your life. And I know a lot of people, don't like stocks, don't understand them. And I really didn't understand them either, but it is the greatest way to create wealth in the world. We have made this free market, and there are people cheating and there's things going on and, inside information. It's not perfect, but it's pretty good. It's a way to invest in massive growth. And there are a lot of companies that won't do anything. That's our goal. Our goal is to understand what companies have great potential and what their downside risk is. And when you buy at least 20 to 30 different stocks, you just need a few of them to hit. And one thing I mentioned, I wrote this somewhere, that diversification is not our goal. In fact, if we have a very successful account in 5 or 6 years, we will be the most undiversified people in the world. Because when we have 20 stocks, you're going to have some that continue to crush it, continue to crush it, continue to crush it, continue to crush it. The reason why you should not invest in mutual funds, because what they do at the end of the year, they look at their portfolio of stocks, and if they have a company that's done very well and has gone over, they have a certain percentage. So for example, if they have a company that's worth more than 10% of the whole fund, they have to sell down their stock. It's called rebalancing. Some do it, I think, once a quarter, some do it once a year. I'm not really sure. It's called rebalancing. People have this idea, this thought in their mind, I need to have a diversified portfolio. The problem with a diversified portfolio is what you're doing is you're selling your winners, because winners tend to win and losers tend to lose. It doesn't mean losers can't come back and win. That certainly happens, but winners tend to win. The stocks that are crushing it and have highs every other week tend to keep getting higher and higher and higher. For a stock to go up 10 times or 100 times in value, it first has to double, then it has to triple, and it has to quadruple. So people always say, well, the stock market's too high now. When should I buy a stock? What I would say? My answer to that would be now. You can't time the market. You buy now. You don't have to put all your money. You can do a third now, third, a little bit of whatever you want to do. But the time to buy the stock is now. And get on those companies that have the massive growth potential. And we want to start buying, just like you had to practice wrapping the film every day. You have to practice yourself, start buying, whether it's once a month, once a week, whatever. Don't. It's very easy to get very intense and following the stock market. Trying to do that, don't watch the daily goings of the stock price, because that is meaningless. When a stock goes up or down a day, that is basically just gambling. Markets go up and down. It's like the ocean. The waves go this way, they go that way. And what's the reason why it happens? There's many reasons. Geopolitical, it could just be the market's down, interest rates change, the oil went up, an attack, whatever it is. But that doesn't change the focus of your company. When you understand a company and understand how it's growing, and maybe you know about the owner, and that his goal is not current income but future growth, then you don't mind keeping the company when it goes down, because every year the stock market goes down 10 or 20%. It happens almost every year, and then every 3 or 4 or 5, 6 years it goes down 30%. We have massive sell-offs like we did last March. What happened after last March sell-off? It came right back. 2008 didn't come back as fast, but the software company stocks certainly did well. I remember back in 2009, I was trading NVIDIA. NVIDIA is a chip stock for like $12 a share. I was buying the stock, selling the options. I was playing around with it. And now it's like $500 a share. I mean, it's crazy. It took years. It wasn't until 2017-18 when they started becoming the chip for all the gamers, and then the stock took off. So number 1, save every month. Number 2, open a brokerage account. And 3, start buying stocks, which I'll give you a list. If you remind me, I sometimes forget. I need to be reminded. And I believe that the value of money has changed. I believe that you will see. Right now, we have 4 trillion-dollar companies. Technically, Tesla's a $1 trillion company because of the outstanding shares they have that are not in play yet. But I think you'll see many, many more $1 trillion stocks. I think companies that are worth $10 to $20 billion now, you'll see worth hundreds of billions of dollars. I think Shopify, which is completely overpriced at $150 billion, will be a $1 trillion company. They have a moat. If you want to go online and sell anything, you open an account with Shopify and they take care of everything for you. They do everything. They do the transactions, the money, everything. And no one else is doing that. You want to buy products in South America, you have to go to Mercado Libre. They're growing massively there. They're going to be a $1 trillion company. So I think we're at an inflection point. I think that we are at an inflection point where you're going to see these software stocks continue to grow like DocuSign. You know, one of the huge ones that I'm still trying to get my hand around, but it has massive growth potential. There's a few areas. One is in telehealth. Right now, it's going massively in diabetes and in mental health. That people don't have to go see their doctor; they can meet with the doctor right on the computer. Massive growth potential. If that continues into other areas, that's going to be a $1 trillion company. Teladoc Health. I don't know, it's 40 or 50 or $60 billion now. I don't remember. It's gone up a lot in the last 2 weeks. But that's going to be that could be a $1 trillion company. Another area you have to think about: what has room for improvement? What areas of the market are completely overpriced? So for me, that would be real estate. You know, why is it that when you sell a $2 million house, they charge you 5% interest, or if you sell a $200,000 house, they charge you 5%. It's the same work, same amount of work. So there's a number of companies, Redfin and Zillow, who are working hard at trying to become that next Uber of basically of real estate. I mean, it's so inefficient that you have to hire this real estate agent to do all this work for you and pay her like $50,000 or $100,000 for what? Like, what's the deal with that? There's room for improvement. And a new stock just came to the market. I bought something called Opendoor, and you know, one of these is going to become, I'm not sure which one, but one of them is going to take off and become the stock for real estate. It's probably going to be Zillow, but it could be Redfin. We don't know. And you got to buy all three. You got to buy Redfin, Opendoor, and Zillow, and hope that one of them becomes the main player. And you know, they say that, you know, a rising tide lifts all boats. You can buy the second place one and still do really well, because if the real estate market keeps getting more expensive and doing better and it gets hotter and hotter. Any questions so far? No? Bueller? Nobody?
I mean, your point, Daniel, is obviously a valid one, but it presumes you're able to pick these companies from the knowledge you have, and how much do you know, how much research is involved, who do you rely upon to believe that these companies have massive growth? I mean, your own personal theory about Peloton is interesting, but candidly, whether you've seen treadmills in my basement or someone else's basement isn't really definitive in my mind to say whether Peloton is going to hit the 100 million user mark. If it's a disruptive technology that's different than just the treadmill that was sitting there that didn't have the coaching and all that. How do you find these companies, I guess, is the challenge.
Well, if you bought Peloton, I wouldn't say it's a mistake, because it does have massive growth potential. It does. I just feel like it also has risk. Right? I just feel like there's risk there. You know, do you know that Yahoo at one time was valued at $105 billion? I think it's valued. I haven't looked. I think someone was like $5 billion. Like these big companies that you think are huge can end up being nothing. You know, and so you have to be able to see the future, and that's seeing the potential of something. But when I see something like Roku, which are Trade Desk, which are have to do with connected TVs, the death of basically of cable television, they're the ones. Like if you're gonna put a streaming service on TV, you have to go through Roku, and they're gonna manage all your ads. They're not selling the ads, but they're managing the ads, and they get a piece of action. That's gonna be a stock that's gonna keep growing, in my opinion. You know, could it have bad years, but you know, you could have a bad year next year, it could triple. You have to find the companies. And now I'm gonna give you a list. That's my goal is to put together my list of what I, probably 50 to 75 companies, and you try to, you ask me what I'd like, because it changes every day. Like this company's gone up too much today. I want to pay for a pullback, whatever. Is that I think that we're on an inflection point in software stocks, in software companies. I think the inflection point is nothing's going to change. No one's going to go start Teladoc and seeing their doctor online and suddenly say, I'd rather go to the office. I mean, that could happen. Banks are going to suddenly say, what, I want to start signing papers again. Like, it's ridiculous. In fact, our signatures have become worthless. We're going to end up having, we're going to end up having digital fingerprints. I mean, think about it. You go to the grocery store and they sign the thing. Like, I like this with the thing. Like, does that mean anything? It means nothing. You're going to have digital fingerprints. So everything's going to have to be digital. I believe that more digital information was stored in 2020 that has been stored in the history of the world. And it's going to grow exponentially. And all the companies that manage that software, that information, are going to be the ones you're going to have to own. For example, one of my favorite companies is called Elastic. They are the search for interior. For example, Google's the search for your computer. But if you go to a company and want to search something, Google doesn't search your company files. Like, there's no Google for, like, if you're, let's say you're Disney. How do you search inside Disney's company? How do you search their computer? You hire Elastic, and they have this whole search program that you pay a monthly fee for, and they can find anything you want. In fact, when you go on Uber, I don't know if Get here in Israel does it, but Uber in America, and they find you a cab, you know who's doing the search for that? Elastic. Unity, another big company, very highly priced, but again, they're the ones that are dealing with all of the, they're the backbone of every video game being produced, not everyone, but most of them. And they're moving into different areas, like Unity Software is moving into architecture, building. When you go into build, they can build you they can show you an idea of a building, interior of a building in a computer, like not just a rendering, but the wires and the pipes, and all this stuff. It's amazing. And they're going to keep growing massively. Unity Software, as simple as U. It went public just recently, a few months ago. I bought it for $100, $110 a share. It's like $150 right now. I want to buy more. I want to buy more. I like Unity. I think that's going to be, you're going to look back in 5, 10 years like, wow, that company's multi-hundreds of billions of dollars. It's not going to stop. And the only reason why I'm doing this class, I got to tell you, is that the value of money is going to change. So you have money in your retirement, earning 3% interest or sitting in cash. You should have some cash, but it's going to get crushed, in my opinion. And Gene, I used to buy and sell gold. I'm not a gold bug, but gold is a hedge, and I think everyone should have some gold. A small percentage of your wealth should be in a little bit of gold, and that's just, and you hope you never use it. It's for a hedge against the valuation of currencies. And this is why, we're not going to get to Bitcoin. It's the whole class. How much time do I have left? I only got 5 minutes left. So anyway, I hope you enjoyed it.
Daniel, I'd like to make a point. You're a bright guy, and it sounds like you picked some good ones in this and that. But I have a good friend that I think I won't identify him because you probably know him, who was investing in various real estate and other business ventures. And he realized the only place he made money was in commercial real estate. He knew that market, and he knew how to do it. And when he ventured into some medical company, he lost his shirt. And the takeaway he shared with me is, you got to know the industry you're investing in.
You do.
You've gone through so many diverse companies or industries. I mean, isn't that the challenge? I mean, you say you could spread yourself with 20 stocks, 30 stocks, but don't you think you have to focus on ones where either you personally know, where you have the ability to gain information from people you trust in those industries so you could make astute investments?
I disagree with you. I do disagree with you because I own commercial real estate and I love real estate. I go to sleep feeling great, but real estate is a hands-on business. You have to be involved. You have to know the area you're buying in, and there are risks, but real estate doesn't have the massive potential. Now, real estate's great because you can parlay a building and you get it leased up and you take the money out and buy another building and parlay. That's your play. That's the play that people have. That's how they get to buy massive buildings in New York City, is parlaying it from small buildings to big buildings. I understand how the game's played. But for the average guy who can't go out and buy a $3 million building or $10 million building, real estate is the way to play. Not real estate, but stocks. And I think you have to start reading about it. I highly recommend it becomes, listen, we go to work to make a job to pay for our retirement. And we go to work for 10 hours a day, 8 hours a day, where you could spend half an hour a day, reading the financials, chasing alpha. I would highly suggest signing up for Motley Fool. $99 a year for their basic program. $99 a year. Motley Fool is one of the best deals going. $99 a year. I mean, it's like they have other services too. They'll try to sell you on. That's what they try to do, is upsell you. But for $99 a year, I've gotten more information than it's been a bargain. Chasing Alpha is a great website. I don't know all of them. I'm sure there's a lot more. But you start reading about, trying to figure out companies and start reading about it. And that's what I did with coins. My goal was to see the potential in something. And that's what I see in software. And I also think right now is the time. I think we hit the inflection point. I think software stocks are going to fly. I think we're going to see the valuations of everything go up. I think you're going to see $1 million houses become $3 million houses. I think you're going to see certain companies that are worth $20 billion become worth $100 billion in 2 years. And I think you'll see more trillion-dollar companies. Right now we have 4. I think we have Google, Apple, Amazon. What's the 4th one? Google, Apple, Amazon. Anyway, huh? We'll see Tesla. We'll probably see Facebook. And I believe you'll start to see companies like Salesforce.com, or you might see Shopify, MasterCard and Visa. I mean, they're going to keep growing and growing and growing. And I haven't even gotten to fintech, which is financial, Square and PayPal. I believe it's going to be a trillion-dollar company. I don't say it's not going to be. That's not going to happen this year or next year, but you're going to look back in 10 years like, yeah. And currency, what's going to happen to currency? Who's going to be using coins anymore and dollar bills? That's going to go away. Everything's going to be on digital currency. And you want to be playing in those markets. Real estate business, digital currency, software, Anyway, this is Zoom. I get 40 minutes. So if you have any.
I had a really quick question.
Yeah.
We only have 2 minutes left. You mentioned there's Chasing Alpha, and the other one that you can.
It's called Motley Fool. Motley Fool. I think you can sign up for their basic service for $99 a year, and you get a lot of information from them. Now, I signed up for them. They give me stocks all the time to recommend. I don't buy everything they recommend. I want to tell you something. They're excellent. I've bought stocks in the last 3 months that they came out a month later and recommended. I found Fubo, F-U-B-O, by myself. They do online sports, and they're going to try to get gaming. It was only valued like $1 billion when I bought it. And I also bought Airbnb right after it went public. Airbnb, to me, is another potential huge bagger. I mean, like, that could be a huge company. I use Airbnb now. I use it, but not now. I'm locked down in Jerusalem. But when I was traveling, I used it all the time. It's a great platform. They have 7 million people listing there. Their moat's pretty big. It's not that easy. They've been starting since 2007 or 2008. It's not like anyone else is going to start and get involved in this business. And that business is going to grow and grow and grow. Is it valued a lot? Yeah, it's $100 billion companies, but it's just going to keep growing. And you'll see that stock go up, and go up. Now, listen, things can happen, whatever. We all make mistakes. But if you have 20 to 30 stocks, you can make mistakes. And some are going to go down, and you're going to have some lose money. But you're going to hit a few of them. They're going to be doubling and doubling and doubling and doubling, and you'll be like sitting pretty. Anyway, if you have any questions.
Daniel, how are you sending your list? On WhatsApp?
If you PM me, I'll send one out.
All right, and also.
I'm only going to send the people in the class. Eli Rappaport is going to get a list. And Schwartz, what's your first name?
David Schwartz.
David, you just signed up,
Schwartz.
right?
Yeah,
How'd you find out about it?
I found out from my son, Avi Schwartz.
And Berman, Ian and Tammy.
And when's your next class?
I don't know. When do you want me to do it? You tell me.
I don't know, is twice a month okay, or? you think
Fine with
you
me.
do
If
more?
you
I
guys
don't
ask,
know.
why not? I'm just doing this for fun. I'm not, like, I'm not.
I mean, I can do it tomorrow.
I want to do it in
so
person.
you
I'd rather do it.
know,
I'd rather do it in person, personally. I mean, like, you know me. You saw me at Essentials. I like to be. I know you didn't see me at Essentials, but I like to be in
Well,
person.
until we can do that,
Until, yeah, maybe next week. We'll see. I'm moving into a new house. I'm really busy with that. I'm actually back at teaching at H a little bit, and gonna have some good ideas.
so you'll just send out another WhatsApp when
Yeah,
you're doing
yeah.
the
I'll send
next
on the
class?
WhatsApp. If enough people ask, I do it. I mean, like, someone asked, "Hey, could you do a live class?" I'm sure. I don't think that person's here. So,
Okay, thanks
All
so
right.
much.
I'll see you guys
Thank you.
later.
Thank you.
Here.